Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with a market update. The US dollar index fell below the 99 mark last week as renewed trade tensions resurfaced. President Trump announced plans to raise tariffs on Chinese imports to 100% while dismissing any upcoming meeting with President Xi. Investors are also digesting the University of Michigan sentiment data, which showed little change in confidence. The ongoing US government shutdown could delay key inflation and labor reports, adding uncertainty to the Fed's next move. WTI crude oil saw sharp volatility last week, rallying early before tumbling over 5% on Friday. President Trump's threat to impose higher tariffs on Chinese goods triggered fresh fears over global oil demand and added pressure to oversupply concerns. Brent futures dropped nearly 4% to $62.68, while WTI slid to $57.9. Analysts now warn that trade tensions and fiscal uncertainty could create a double hit to oil demand. After reaching a record high of $4,059, gold staged a dramatic pullback last week, plunging nearly 2% intraday before rebounding above $4,000. The renewed tension between Washington and Beijing reignited safe haven demand, pushing prices back toward record territory. Gold has now gained around 52% year to date and marked its 8th straight weekly rise, up 3.35% for the week. The Japanese yen extended its slide last week, hovering near an 8-month low around 153.2. Markets expect new ruling party leader Sanae Takaichi to pursue expansionary fiscal policy, deepening concerns over Japan's already fragile finances. Although the Bank of Japan may hike once more this year, officials are signaling no rush to tighten. The yen briefly rebounded to 151.15 after news that the Komeito party could leave the coalition government, while Trump's fresh tariff threat added to global risk aversion. The euro fell more than 1.4% last week, hitting a 2-month low near 1.154 as French political turmoil rattled markets. President Macron's struggle to form a stable government has raised fresh doubts about fiscal reform in Europe's second largest economy. While avoiding snap elections reduce the immediate risk of far-right gains, gridlock in parliament continues to cloud the outlook. Former Prime Minister Le Cornu's idea of a technocratic government offers temporary relief, but key legislation remains at risk of stalling.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.